Look at the top of your credit card statement. One number. Say 64,000 rupees. Now scroll down. Dozens of purchases. Coffee, fuel, a flight, groceries. Add every one of them up and you land right back on that same total. The total is the summary. The line items are the detail, and they always reconcile. A company's books pull off the exact same trick. One summary on top, all the detail underneath. That two-layer system is what runs every real ledger. Last time, we lined up the accounts as labeled jars. Cash, sales, rent. One jar, one total. But here's the catch. Take the jar called Accounts Receivable, the money customers owe you. A real business might have 4,000 customers. If every single invoice landed straight in that one jar, the general ledger would be 40,000 rows long. Nobody could read it. So accountants do something clever. They split the busy jars into two layers. The general ledger keeps one clean summary line, and a second book, a sub-ledger, holds all the messy detail. Here's the top layer, the general ledger. For accounts receivable, it shows a single line, 2,40,000 rupees owed. That summary line has a name, a control account. It knows the total. It does not know the names. To see the names, you drop into the bottom layer, the sub-ledger. One account per customer. Sharma Traders, Bharat Foods, Coastal Supplies, Meta and Company. The control account is the total. The sub-ledger is who and how much. And here's the rule that ties the whole thing together. Add up every customer in the sub-ledger. 84,000 plus 63 plus 36 plus 57, 2,40,000. The exact same number sitting in the control account. The detail always sums back to the summary. Always. Accountants even have a name for that proof. The Schedule of Accounts Receivable. List every customer, total it, and it must match the control account to the rupee, and the two layers move together. Watch. Bharat Foods pays 13,000 rupees. Down in the sub-ledger, their balance drops. And up in the general ledger, the control account drops by the exact same 13,000. One event, recorded in both layers at once. The detail and the summary never drift apart. As long as the books are right, they are always equal. So what happens when they're not equal? Say you add up every customer in the sub-ledger and get 2,26,300. But the control account reads 2,40,000. That gap, 13,700 rupees, is a problem. It means money got recorded in one place but not the other. Maybe an invoice hit the general ledger's summary but never reached a customer's account in the detail. Finding that gap and explaining it has a name you'll hear for the rest of this series. Reconciliation. Two records of the same money lined up and proven equal. So that's the two-tier system. The general ledger holds the summary, one control account per busy area. The sub-ledger holds the detail, line by line. And the two must always tie out. Not every account needs this. A single bank loan is just one line. But the busy ones, what customers owe you, what you owe suppliers, inventory, fixed assets, each gets its own sub-ledger. And every time you prove a summary against its detail, you are reconciling. Which is exactly where we're headed next.